Hey guys, it is April 25th, 11:30 a.m. I'm going to go over some different things this weekend. I'm going to show you some of the trades I made. Just to give you guys an idea, we started this account about a month ago. There was 25,000 account. We got up to 39. There was one horrible trade I made. I didn't follow my discipline. It was a little bit of an ego gambling trade, and I went off the beaten path and lost a fairly decent amount of money, set us back. So we're at 34.4. Tuesday we were up 1,600. Wednesday we were down 260. Thursday we were up 800. Yesterday we lost 600. We're still stepping in the right direction, but we got to tighten up a few things that I'm doing wrong. Focusing on the wrong stocks yesterday. Yesterday was a weird day, and I'll go into why I think the S&P 500 is on its final leg here to the upside. I'll go into why everybody's got this market wrong. We'll talk about some market psychology that I'm looking at. I'm starting to see the bears throw in the towel a little bit more, and when I see stock twits, I'm looking at the volatility index pull back, getting a little bit of complacency, all the stuff that I like to see prior to a big move to the downside, or not a big move, but generally a pullback. Let's use the analogy of, so everybody's betting against the market here. You go on YouTube, at least a couple weeks ago, and it's, we broke the upward pattern in the market. These guys are drawing channels from, I don't know what the hell they're doing. Some of the guys that have 100,000 subscribers, and they're drawing some of these channels that they're drawing for the stock market on SPY are like absurd. Let's just remove this here and I'll show you what I'm talking about. And you've seen this before. I'm not going to keep beating a dead horse, but we have to remove the drawing set. So a lot of guys are saying, we're going to go retest the bottom. Yada yada yada, because they draw their stock channels, their price channels based on a low, which isn't the best thing to do. You have an emotional bottom here. You're going to base your entire 5 years from now, 10 years from now on this bottom here on the market. No, I want to see where we go from an emotional dump where guys are comfortable holding stocks at, and it's this candle right here. This is your important candle. Plus we have some consistency here. We're looking for common touches, and I'll get into that later. So these guys that are drawing this candle like this, and then they're like, oh, the market's broken, we're like this. Like, I get it. There is a channel that runs in the middle there, but this isn't the channel. And if you keep doing that, you're going to get frustrated. There is a use for a channel like this, but this isn't what we're looking at right now, and it kept me from going short. So let's remove that, and this is actually the channel that you want to look at, because these are normal wave patterns that we're seeing in the market, and we should have already come down and corrected to the bottom wave. And if we draw another channel to the top, this doesn't have to be perfect because we're doing this in real time. It's something like this, and we can have closes above the channel. The reason we don't draw the tops of channels is because there are highs that we want to reach before we have significant directional changes. This is a significant directional change, so we want to make sure that those candles are caught. So we're kind of in this little channel here. There's waves within waves, and I'll show you on the hourly, but this is your first wave. You have a normal pullback here, some consolidation with some higher highs. Then you got a big volume firing up to the top end. And then here's your consolidation on the bottom. On the top end, you should have pulled back here and had a touch there. We're looking at 1, 2, 3, 4, 5, 6. You could say 5 before you start to have a pullback. And then 1, 2, 3, 4. We should have probably started to pull back here, but I think this is when the Gilead news came out. One of these days was. But so we're following a normal pattern here. We're above the 20 on the EMA. We're staying above the 20 on the EMA. So guys that are saying that we broke this, we're going to start to pull back here, and I guess this is a better view here. If we put a little bit more trajectory on the market, you can see that it has been a V pattern here, surprisingly. So we're still in this pattern here, and I'm going to show you on the hourly why we're kind of running out of steam here. We do have a little bit of a crossover on the positive, but crossovers to the positive that generate power to the upside don't come with declining volume, and they usually take shape lower on the MACD spectrum. And we're also kind of floundering in the RSI. So market's getting tired here. When do you go short the market? Well, first of all, do you think the market's going to have a super strong pullback? I don't think so. That's just my personal opinion. What would cause that? The analogy is like your neighbor loses his job and everybody bets that he's going to start losing his car, his house, and you start betting against him. Let's just use this as an analogy. And then you see, hey, what the hell? The guy's got a brand new Mercedes out front now. He has no job, but you don't realize he's putting it on credit. So the Fed is the credit card for the entire market here. So he goes out and he buys a Mercedes, and you're like, okay, now he's really got now he's over his head. What happens? He gets more credit, buys more stuff, and you just keep betting against him. You're like, how is this possible? The guy doesn't have a job. He's not working. He's spending money hand over fist, but he keeps getting all these nice toys. That's kind of the market right now. You're betting that the Fed can't keep bailing out the bond market. You're betting that the Fed can't keep pumping liquidity in. So all that pumping is momentum. Once the pumping starts to slow up and you start to see an energy transfer between the reality of the market, what it looks like on the other side, which is probably not pretty, you're going to start to see a pushback on the energy into the bottom channels of the market. Does it mean we crash? No, because that credit card's still out there. That credit card's still supporting it. But you're going to start to see some weird changes in the market that people aren't used to. This market's going to slap a lot of bears in the face, and it already has. But just follow my direction. Not that I'm perfect here, but I think I got a pretty good beat on the market. Hopefully we'll see. So far we've been right, and I'll show you what I'm looking at. Why I kind of think we're running out of steam on the hourly. It definitely is showing us that there's a directional change coming up. Let's do a 30-day, and we'll do an hour chart. We're seeing a little bit of complacency here in the volume. What's the first thing that stands out here on this volume chart on the hourly 30-day is that the volume is starting to decline, right? We have a declining volume here, right? We're not aggressively buying the market dips. The market's kind of confused here which way to go. We're kind of at a neutral stance here on the MACD. We do have a nice progressive stair step, but we're starting to tighten in here. So we're probably going to have a directional change. We did get a little bit overbought on the hourly, and we're in the lower part of the momentum channel. So when I see people in stock trade starting to throw in the towel, bears saying, oh my God, this market's just never going to stop going up. This is ridiculous. I thought it was just to roll over and break and crash to the bottom side. When I start to see those guys start to throw in the towel, and then I start getting a little more bearish. So here's our hourly channel. Once again, we're looking for common touches. We don't want to draw it up this way. We want to kind of draw it in this area right here. I want to catch some of these channels. So we think this is our pivotal directional change. Here's our top channel. So I think we have a fair channel assessment here. I don't want to draw it to the tops. I want to catch candles before directional moves. Candles right in here before directional moves. Candles, not the top, before directional moves. I think this is a pretty good pattern that we've drawn here on the market. There is also a middle candle pattern that we want to draw from pivotal changes too, and it kind of rides something like this, where we're catching some directional changes as well. And if we don't get above this candle, this channel early next week and start to push to the high end of the spectrum here on the chart channel, you're probably going to see us go down and retest that 270 area, which lines up perfectly with my lower channel. So that's a couple things that I'm looking at. For you guys that are asking about, what do you look at for trading? Let's just look over a couple trades. First of all, shop, and then we'll finish up really quick. This is the stuff I look at during the day. If we wanted to come in and we were kind of not sure about oil direction, what's the first thing we want to do? We want to see a pattern develop, right? And then we'll run our RSI, our Fibonacci candle, and then we're set for the day. So we're very patient. Oh, I just missed that. Okay, no big deal. Let's let the pattern develop. And we're seeing the pattern develop here. And where do we see a directional change? Well, Henry, how did you know that was a directional change? First of all, it had a big volume. We have sort of a pattern developing here. We have an RSI overbought with a spike, and then the RSI falls below this little trending pattern that we had. So here's the directional change candle. It's high volume, right? So let's draw our Fibonacci fan. Now we have shape. We were very patient. We waited till 11 before we started even doing anything. Now we have a Fibonacci candle or pattern for the whole day to look at. And if we back up and use this fan for our trading for all day long, it works out beautifully. So now we're patient. We waited for shape change. We have something to go off of. let's go ahead and zoom in and look at how the Fibonacci fan worked for the rest of the day. It worked like a charm, whether you wanted to go long or short. Once again, looking at RSI patterns, pin down to the bottom, MACD crossover, hit the bottom of our Fibonacci fan, go long here. Where's our target price? I don't know. Do we cross over the middle? Let's keep loosening up our stop and let it go. It's going higher and higher. Now we're starting to see a shape change. It hit the top of our candle. I didn't mean to draw that. Of our Fibonacci fan. Time to get out. That's a nice trade. We waited all day long. It hit the bottom of our Fibonacci fan. We have RSI at the bottom. Everything here is just beautiful. Boom. Top of the fan. Get out. You could even flip over because we have a MACD crossover. We have a big volume spike, which is indicative of a top, and the second volume candle is very heavy. These are very quick moving stocks, so you have to be sharp on the trigger. But once again, we're not buying or selling short until we see extremes in RSI. Here's an extreme on the bottom. MACD starts to curl. You have some relative strength prior to this MACD at a higher level, and boom, there's your simple move to the upside. So I'm going to go into some other stuff later. I'm going to show you why I think the market's kind of running out of gas here. It could be complacency before we shoot to the upside. It has to do with market psychology. Too many bears are starting to peak out now. Too many bulls are starting to peak out now, and the bears are giving up. To me, that's a contrarian indication that the market might be forming some sort of a last leg here. If we do go higher, it'll be the last leg, and then I'll start to aggressively short, looking for a pullback, not a crash, but a pullback.